In this video, we are going to be talking about the top 6 penny stocks that are going to be spiking in April 2020. Now, penny stocks are a powerful part of our trading strategy because they have much larger reactions to news events as compared to larger stocks. That is because if you have a no name, no value company versus a big name, big value company, if a big news event happens to the no name company, it's going to go up massively. Versus a big company like Apple, if a big news event comes out, hey, maybe it'll go up 5%. But don't take it from me, take it from some of our previous picks. We called out ITCI because the company announced they'd be having their FDA approval decision on December 27th. They got approved and they subsequently ran up about 230%. But while 80% of late-stage FDA approvals do end up getting approved, we can never say for certain whether the one that we're watching is. So instead of blindly holding through the news announcements from here to here, you'd instead opt to exploit this run by buying in at confirmation and out at validation. And then exploit this run separately by buying in at confirmation and, you guessed it, out at validation. But why? Why is that we have to sell out at validation? Why can't we just randomly buy in and the price will go up because I said so? Well, because other than in hindsight, there's no real way to say whether or not something's going to get approved. And if it gets approved, it can still get beat down if it gets pre-factored into the share price ahead of time. If everybody thinks something's going to get approved, hey, they're going to buy it before it even gets approved, and then when it gets approved, there's no surprise. So you don't know what direction the price action is going to go. So you need the price action to prove to you that it's going to go in the direction that you want it to. So instead of guessing on whether something's going to happen, you wait for the price action to prove to you by giving you price strength. And whatever you do, you don't hold through the news announcement because that's gambling. But with the opportunities that we're talking about on this video, your success will be determined based on your own preferences. Are you going to choose to randomly buy in, or are you going to choose to play a catalyst and have a concrete plan? For example, I announced RMTI last month because they were due for an FDA approval for their drug for anemia. The drug was approved, it subsequently ran up about 40%, had a clean confirmation, and then a great run. But since every reaction is an overreaction, it sold off afterwards. So if your preference was to buy in with your fingers crossed, you would have lost money. How do you not lose money? Well, by having a concrete plan and executing on said plan. But you could also opt to play directly the beer bug plays. For example, AYTU was one of our picks from Zip Trader Circle's nightly watch list, and while we didn't catch this original run ourselves, we did include this run when we heard of FDA approval for their tests. And this wasn't because we knew it was going to go up, but rather because we knew that this was a catalyst and a high probability setup. So anyways, my point is just trade like a spoiled brat. Wait for the price action to convince you to take a position, not the other way around. But anyways, the only thing that I ask in return for a video like this, and you know a lot of work goes into a video like this, the only thing that I ask is that you hit that ravishing like button. Also, quick plug for folks who are wondering what broker to trade these stocks on. I always like to send new traders over to Webull. They have a very powerful and pretty beginner-friendly platform for folks who are looking to grow their accounts. One of my favorite features that they have is their after-hours scanning tool, which allows you to find stocks that are gapping up or are showing price strength after hours so that you can then go and track them at market open. But of course, you should know that Webull is a commission-free broker, and better yet, if you sign up and deposit any amount with our link in the description below, you will get not 1, but 2 free stocks. If you are broker curious, you might as well check it out. Okay, first, so this is actually the first time we're going to start a top penny stock video with talking about a penny stock that's not biotech related. These are quite wild times. But LK got beat down like a winter gnome in the summertime on probes for fraud. Now, LK is essentially the Chinese version of Starbucks, and this comes as big news since LK had been holding fairly strong given the gravity of this whole beer bug crisis. Apparently, this is a hashtag fake company, as they faked about $310 million in sales. Trash company, folks, and this is why I never tell people to hold penny stocks. It's ridiculous. If you are the type of person that wants to hold a stock like this, you and me, we're not friends. But anyways, 81%, folks. And since every reaction is an overreaction, we get beat down to initial overreaction lows at 374, and then we get our beautiful overreaction correction. And of course, a casual shout out to our Zip traders within Zip Trader U and Zip Trader Circle that caught this. But we had this overreaction correction, which was more than 100% of upside from $3.74 to $10. And if you are aggressive with your aggregation period, you can ride price strength from confirmation to validation. This is the 1 minute aggregation period. Make sure you're picking the right aggregation period. But anyways, today it continued selling off. And here we have a company that was trading at $53 mid-January and is now trading at 1/10 that price at $5. So the question now isn't, is LK worth 1/10 the price that it was just 2 months ago, but rather will sheep investors feel that it is? Will sheep investors buy in at the first showing of price strength or the first slightly positive catalyst? Well, we don't know, but we do know that every reaction is an overreaction, and any sort of good news means that we have a huge amount of upside compared to uncharted downside. And we know that this already has a previous history of overreacting. So the plan with this is to set alerts. Any catalyst or news coverage can cause LK to drive up a slur of new investors seeking to profit off the perceived discount and will allow us to take advantage of any rapid movements and caffeinate our way all the way to the banks. Ha, get it? Caffeinate our way to the banks because this is a coffee company. Ha. Okay, next. So AYTU had been on the come up since it spiked massively from 34 cents to about $2.99. But why? Why did this happen? Well, it's speculation based on the announcement for their exclusive distribution of the beer bug test that they were coming out with. And like clockwork, investors flocked to this previously failing company and the volume and price rose some 700%. But why did it do that, Charlie? Well, you need to know that investors are sheep, and when good news comes out, everybody expects the best, just like when bad news comes out, everybody expects the worst. But neither extremes are ever completely true, and thus every reaction is an overreaction once the dust is settled. But then on the 23rd, the FDA approved their test, and it started being distributed, and boom, we get another run-up. This one was mentioned earlier. But why would we have another run-up? Well, it's because investors' best case scenario factored in AYTU's value at $2.99. So every announcement after that might lead investors to think that we're returning to that best case scenario will push us back towards that $2.99 line. And when it comes to something like AYTU, this is really the chance for a fairly irrelevant company to become relevant. But of course, the jury is always out as to whether this test is going to bolster AYTU back to relevance, or rather I should say to its first shot at relevance. But to be frank, who cares? It's all about us and our need to make money. And we already know that AYTU has a previous pattern of spiking on news events that provide clean runs. And this is one huge elevating factor that can provide quite profitable opportunities if we continue to see similar price action. But Charlie, what are the monkeys/analysts saying? Well, the monkeys are giving us a median price target at about $4.88. This is, of course, a 208% increase over our current share price, which is, of course, in and of itself a massive increase over the share price just a few months ago. So why do we care? Well, we care because sheep investors love to follow these monkey analyst price targets. So they give these wildly emotional price targets, and boom, when we see a catalyst, they all flow in. But the question now is, will we see more catalysts? Is there still opportunity here? Well, based on the setup and previous patterns, and of course the fact that these tests are being shipped on a fundamental basis, it's fairly certain that we're going to see some strong price action entering into this month. But if we don't get the price action we want, guess what? Then we don't play it. The amount of people that buy into sloppy price action just disgusts me. If you are the type of person that trades without a trading plan and has no standards for what you're buying into, you are a wild animal and need to be locked in a cage. Step away from the computer. Okay, so one of the things that you probably noticed with many of the former beer bug plays is that they run up massively and then sort of fade out as the hype dies down. Now, this is true for any hype play, whether that was the MJ sector from a couple years ago, whether that was Tesla, whether that was the hype plays with the beer bug. This is true for any hype plays. However, in hype comes opportunity, and these display several comeback periods where we receive rapid displays of hype and then a continuation of sell-off. This is how AYTU behaved, this is how NNVC behaved, and that's how OPK behaved, and so forth. But the key with this is if we know these run-ups are followed by selling off and smaller forms of price strength later on, doesn't it make sense to track these so that we can take advantage of this pattern? Well, yes, son, yes. Yes, it does. And so I present to you the people, APT. So 2 days ago, APT ran up massively upon mask demand. Today it ran up again, but it provided some seriously clean running over the SMA. And APT will continue to have opportunities to run up as they are manufacturing the N95 masks, and they will be in the making for some more contracts. We have this small spike here, and then a bigger spike here, and a corrective overreaction spike here. This is great because we have a previous pattern of overreactions and then subsequent corrections, but then also it has the ability to sell off massively, providing us a better entry point. So to be honest, I do want to get a good deal on this. We need to get a good deal. That means we need it to sell off. And how does it sell off? How do we know that it's sold off in the correct way? Well, we want it to be oversold, and we want it to be at least around 1180. It wouldn't be a terrible position if we got in both at a good deal and we got in when it had regained price strength, because you don't buy something just because it's sold off. People are always like, buy the dip, buy the dip. Okay, but you want to buy the dip when it's showing signs that it's no longer dipping. So let's focus on getting a good deal and also buying into price strength so that we can ride from confirmation to validation. Okay, so today BSGM runs up like a moderately inflamed banshee from 374 to 52 before selling off, since every reaction is an overreaction. But this company's relevance really started about 2 weeks ago when they announced they'd be given the rights for a variation of a potential beer bug cure that they were coming out with. Now, obviously grain of salt, but on the later announcement that they'd be updating the development of this drug, their share price once again ran up like a hormonal teenager. And this keeps happening over and over again with these hype plays. They give an announcement, people freak out, the announcement gets old, the share price dives, and then the process repeats again. The question now is if this drug has staying power in the minds of the media and the minds of the investors, and whether or not this drug will cause more catalysts coming into this month. We know that BSGM is highly reactive to news events, and of course we want this price to get beat down even further before we even consider taking a position. But one of the things that I always tell folks is to not trust a company and not to just fall in love with a story, but rather to wait till the price action proves to you that it's a good setup. And with something like BSGM, you're making sure to buy in when you see signs of a recovery. It's repetitive, I know, trading is a repetitive game, but you want to make sure that we're not buying sick dogs on the side of the street. You want to adopt your sick dog when it's showing signs of a recovery. And what are the monkeys giving it? Well, the monkeys are giving it a price target at $11. Gotta love the optimistic monkeys. Quite optimistic, folks. These are the best animals in the zoo. Okay, next, URGN. So URGN has its FDA approval date on April 18th, 2020 for their drug for carcinoma. Now, the reason that I actually like this opportunity quite a lot is because since it's been beat down so much with the overall market, we now have a lot more upside if this drug actually does get approved. And something like this is likely to fly more under the radar due to the fact that the news outlets in the biotech world are so focused on the beer bug. But it really shouldn't be flying under the radar. URGN is a company with big name institutional holders such as BlackRock and Credit Suisse. But Charlie, why would you even care about institutional buys? I thought you said all analysts are monkeys. Well, the reason we care about institutional buyers instead of analysts is because institutions actually put their money where their mouth is. If you have an analyst monkey that is giving us a price target that's like 200% higher, but their firm isn't making actions with their own money to take advantage of that, then hey, that's a little bit suspicious, don't you think? But just to show you how ridiculous the analyst monkeys are, URGN has an analyst price target at about $50. That's 181% of upside. And maybe you'd say, hey Charlie, maybe that means that in 20 years, the analysts think it's going to be worth 181% more. Well, no, price targets are 6 to 12 month periods. Don't trust the monkeys, folks. Okay, next, XSPA. Now, XSPA is about as low cap as I'd ever feel comfortable talking about, but it does run up massively and has spikeability. Today, it ran up about 36% at the time of filming this video. But this is relevant because one of the things we look for in penny stocks is what we called, and what I just said, spikeability. That means that the price action has a history of spiking massively on news events and then selling off. But at the same time, you do need to understand that as we get closer to zero, the more sporadic the movements in these stocks become. And while this particular move was catalyzed on news reports that they were helping with the beer bug screening and testing at US airports, the truth is that we don't really know when these events are going to drop. So that means that we have to be very alert heavy in order to figure out when this is showing price strength. The good news is there's not much to move this stock unless it's showing a catalyst. So it's quite easy to set a price alert and then take advantage of any subsequent move. But look folks, you can't be a Neanderthal when you're trading these stocks. This is a trash company in terms of fundamentals, so if you're looking on buying this and then just holding it for weeks or months, I already hate you. you suck. Don't hold and hope. These stocks hold a purpose, and that purpose is to trade off its random price action. Okay folks, well I do hope that this video was helpful and insightful. One of the biggest tips that I could ever give you with these stocks or any of the stocks that we talk about is to trade like a spoiled brat. What that means is not taking positions that don't show high probability setups. Understand what elevating factors are. What are the factors that are going to lead you to taking a profitable position? Are you oversold? Do you have a previous pattern? Do you have a catalyst? Are you showing confirmation? So on and so forth. And you better bet that Papa Charlie won't be buying any of these stocks unless he sees his elevating factors. But anyways, folks, if you have any questions whatsoever, feel free to comment in the comment section below. If you'd like to join us on Zip Trader Circle for our nightly watch list, you can also join us in the description below where we have our link. And if you'd like to learn how to trade in a structured environment, we do also offer Zip Trader U, which is of course our private tutoring chat and private course for folks who are looking to take that extra step. Anyways, folks, have a great day. Stay safe, and I'll see you in the next video.